All right, y'all, welcome back to the channel. I got that free group live. Don't forget to get the PDF. We are talking about J hooks in this video. So go get that PDF so you can learn all the signals, because it's usually the signals that give me a warning that a J hook might happen. Something like this bull on bull engulfing signal, left right combo. If this is a bullish signal and it implies the price is going up, and as you see this gray line right here, y'all see this gray line, that's a breakout point. It's the 21 exponential moving average. So look, all a J hook ever is gonna be is you're gonna have a breakout point. So let's use the purple line as the breakout point. This could be the 50 simple day moving average. It could be price resistance. So it's gonna usually be a moving average, or a price resistance, a specific price that you can see with the candles, but you basically can draw some type of line. So that's what this gray line represents. And what have I told y'all many times? A J hook is one of my favorite candlestick patterns. It is a continuation pattern, just like that mat hold pattern I talked to y'all about. And it implies more upside. The prerequisite for a J hook is a strong price move. So you're going to have some type of up move of some decent degree, typically one big white candle or a couple consecutive white candles. Then you're going to have the inevitable retracement. And this is where I start looking for money at. So let's take a look at this trade right here. I'm in this trade right now, AIRE, with the whole purpose. I'm not going to be telling y'all every win I got. I'm not going to have y'all counting my pockets on the internet. I'm not going to be overly in y'all business. The point is not if I make $1 million on this trade or not. It's that I'm getting better and better and better and more confident at buying trades and identifying them as soon as possible. So look what happened here. Japanese candlestick signal. Remember, we're talking about the J hook. So the goal with the J hook is to understand we want to find our signals in the oversold condition with a close above the 8 exponential. Because the signal's been around 500 years, so they work. But now in these updated times, these days with new technology and all that type of shit, what we actually doing now is using the moving averages as extra confirmations. So candlestick signal, price should be moving up. Price did move up. Y'all got that PDF? Let me pull out the PDF for y'all. If you want this PDF, just join my free group. All you gotta do is comment J Hook, and I will send you a link with the full PDF. Like an hour, like a little bit less than an hour of a bonus video where I teach you and train you. This the PDF though. This the PDF, and the point is that this signal I'm showing y'all is in here. If you got this PDF, you already know where I'm going. The engulfing signal opens lower than the previous day's close. Bull step in and we close it higher than the previous day's open. Let's walk back through this again right quick for my beginners. You got to know what a open and close candle is. So when I say the open, it's dictated by the color of the candle. All red opens are the top of the body of the candle. That's the bigger part, not the skinny candle wick part. So if you know that, then you know that I can explain the signal to you and you can draw it out. You have a red day, down day, then the next day opens below the previous day's close. And then bulls push it all the way up to where it closes at or above the previous day's open, engulfing that previous day's candle. So that's what happened here. Ladies and gentlemen, that's what happened here. Let me zoom in for y'all. And let's now remove this and let's draw our little trend lines. I mean, y'all see. Y'all see exactly what happened here. That look real familiar. If you pay attention, this look real familiar to this right here. All right, boom. So now you following me. Now I'm starting to make some damn sense now. Okay, so price went up. What did I say was the prerequisite for a J hook? A strong price move, an upward, relatively decent move. I say this, typically breaking through, depending on where I'm at, but typically breaking through the next highest moving average, touching or breaking through, but eventually failing back to our magical 8 exponential. Then what's the next expected move of a J hook? This is how I be telling y'all, I can show you how to cut your losses short, let your profits run. I can show you how to get money with this shit the same way I'm trying to get money with this. The biggest thing is taking bigger positions, growing into having confidence and having a system where you take bigger positions and you trade more often, because it's the law of large numbers. If you're trying to fish in a pond, we all know fishing can be relatively slow. You'll catch more fish if you have 20 fishing poles in that pond than you would if you just had one, maybe two. Same concept here. Long as you cut your losses short. So let me show you all this too. Strong price move, you're going to have that retracement. This is how J hooks work. Listen, it's called a J hook for this reason. Look, you're going to draw the first letter of my name with this signal. Look, J. That's what makes it a J hook. You have a strong move, the inevitable retracement. Then we break out. And what's our breakout point? The same breakout point that I've shown y'all on several different trades, several different situations. It's going to always be some high. Some type of high again, or a moving average. It's going to be price or a moving average. So your high would have been right here. Right? So what we'll probably start seeing is Japanese candlestick signals setting up somewhere up in here. Typically with a gap up right here. Typically. Because you want to break through these resistances strong. But even if you don't, that's your J hook. So you have some type of strong price move, some type of upward move creating the first part of the J. Then sometime this part is 2 days. 1, 2, 3, 4. It's 4 days, 2 days, 4 days. Sometimes it's 2 weeks. But when you're selling here, you know you can be buying back here on a J hook pattern, an ancient and beautiful Japanese candlestick setup. So let's walk through these trades with the intent, again, not to brag, not to risk embarrassing myself, good or bad, right? Not to do none of that. It's to show y'all that I actually eat my own cooking. I trade the trades that I'm talking about. Listen, I'm saying this with absolute gratitude in this moment, y'all, for those that's listening. These signals have changed my life. Even right now, I just bought into this trade. This is a trade that I took a small loss on earlier. It had a look of finna go, probably right here. Probably right here. We had like a hammer gap up, inverted hammer, left right hammer type setup in an oversold condition. Gapped up, then gapped back down. So I probably sold out somewhere in there, assuming that's where I bought. But I bought this trade, so I watched it again. Because another thing I learned is the Japanese candlestick signals can be so accurate that they're super early. So they might tell me 3, 5, 7 days before the actual big move that the bulls are stepping in, based on the signals that they making. So if you're still watching the video, I need you to make sure to hit the link in my bio, comment either hit the link in the bio or comment J Hook, and I'll DM you and I'll send you a link to my free Facebook group, 100% free. I got a whole course in there. I'm giving y'all everything I got for free with the goal of getting some testimonials that my shit works, that this system works. It's not even a question. I keep showing y'all, and I'm going to keep showing y'all low cap stocks right now, but I can show y'all $20 stocks. I've done it so many times, and I'll keep doing it because I, as well as you, need to understand that price is irrelevant. You look for Japanese candlestick signals because they are the visual representation of all the decisions being made on any stock. Once you see what you think that decision is, now you determine, is the decision likely to be bullish, meaning price will rise? If that decision is likely, then I think I want to deploy funds. I want to commit investment funds to this position and then keep my eye on the trade. Next day open, next day open. Y'all hear these narratives all day, and I'm getting better at making content, so I've been dropping a bunch of fire shorts with a bunch of nice little golden nuggets. I've been dropping longer form YouTube videos. I've been all over all my apps, so it's not like you can't find me. All you got to do is tap in with me. And again, I eat my own cooking. So what do we have? Let's go back. I love this fucking signal. Let's go back and talk about the J hook one more time. So this green line is the 8 exponential moving average. It's a Fibonacci number. And we trust it as a very Fibonacci. It's a Fibonacci number, and it's called the 8x. It's like natural support and resistance of human nature. I learned it from a man who has passed on, rest his soul. He passed on in 2023, I believe. He had 40 plus years of candlestick trading. Thank God he was the person I learned from, because Japanese candlestick signals within themselves are a major, probably the best trading strategy I've ever researched. At least as a primary decision making data point. I make my decisions based off the Japanese candlestick signals, and then everything else is just confirming or denying. So you had this green line, because some of y'all knew, some of y'all don't know that. The purple line is going to represent price. So what you'll have, I've been doing this so damn long, the price is going to be under that green line whenever this green line has this type of shape to it. So then, boom, now we start to see, let's say, hammers, inverted hammers. Then eventually, let's say inverted hammer gap up in the oversold condition. Let's say now you got a gap up after an inverted hammer. Price is probably going up. Then, now let me see. Let me actually do this right here. Make it look a little bit more accurate. So what you will probably have is you will have this. Then you would have crossed above the 8x. Then you would have had something like this, where price would have went up. This is the J hook right here. This is the epitome of a J hook. You're going to have a downtrend, typically a strong candlestick signal, a strong up move, up, then you get that inevitable retracement. Because listen, y'all, even if the price is going from $1 to $100, it probably won't go straight up like, it doesn't go up vertically for very long. It ebbs and it flows. It ebbs and it flows like a river. Stock prices are very, very natural. Don't let me get to talking weird on y'all, because there's a very supernatural, natural interconnectedness between frequencies, Fibonacci sequence, golden ratio, stock trading prices, the way we see the stock trading move, Mississippi River, how water runs down a hill. Again, sound frequency, waves, all that type of shit, man. It all has this same little move to it. From stock prices too. This is one reason why I'm able to trade prices, because there's something deeply connected to me spiritually, but also a pattern. There's a repetition there. There's a continued set of formations day in, day out, across whatever position, every single day, across any entity that has fear and greed in it. And this is how we can see the same signals over and over. So J hook, boom, then this is what we're looking for. The actual letter J. So what does this mean? One, it can't go too far down here because it's going to break the formation. You feel what I'm saying? It can't go too far down there because you're going to break the whole format. So we don't want to see this. That inevitable retracement with profit taking, a little bit of fear, correction, stock correction, whatever you want to call it. Whoa, 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 whoa. That's what we don't want to see. That's not a J hook. That's not a J hook. So that's why I love teaching these signals, because it's making me a better trader. Because the more I expect y'all to conduct yourself a certain way, the more those same rules are at the forefront of my mind. So let's break this down. Let's go to another trade. What other trade am I in right now? I gotta leave y'all with this one. I be giving y'all way too much game for real. Jump in the comments and let me know if you have any questions. Let me know if you have any questions. I will make custom videos about that. Any Japanese signal you want to learn, any setup, any pattern, any way, any stop loss, you can ask me my experiences. Y'all can ask me what's my best trades, my worst trades. What would I do if I had to start over? Why do I trade so much? What have I learned since I've coming back to trading full time? Whoa, did I buy this? I did buy this. I hope I don't get cooked. Because this stock is so damn new, it don't even have all the moving averages yet. Nah, I think I knew about this. This was a different stock called something. And they maybe SHOT, S-H-O-T. Damn, that's crazy. Let's see. And they changed their name. Yep, look, y'all. I like this stock. I don't know why. It was SHOT, see? It was S-H-O-T. Then they changed their name. That's why they shit looks so new. Because they supposed to have that blue line, the 50, that red line, the 200-day moving average. All right, J-hook pattern. Same thing like I said, I eat my own cooking. The beauty of having these signals, patterns, and these moving averages is now I have a more refined J-hook setup. I'm telling y'all, I've been doing this a long time. I've had a lot of fucking losing trades, which has helped me become a winning trader. I can tell you this now, on BNKK, this shit already got me feeling some kind of way. With this beautiful setup, gap up after a doji, with a J-hook style pattern, remember, the whole J-hook is real simple to look at. It got the same kind of setup. Look at this. Look, let me show y'all here. Price went up, price went down, price went back up. Now the lines I just made is a little bit sharper, but this J-hook is not all super rounded. But this is the concept you're seeing. Up here, kind of a curve, the letter U. Hold on, go back to this one. I hope y'all learning something, because you really should, because you can take all this shit I'm saying and go apply it today. I stand on everything I'm saying. I put my trading system up against every single person who is an active trader and thinks that they have a system that's reliable. I'll put this up against all them. So look at this. This PDF, I really wish I had this, because I've been sitting on so much of this info. What I consolidated into a simple PDF was, I'm telling you, thousands of hours. I swear to God, I've been trading since 2017. Addicted too, obsessed. So thousands and thousands and thousands of hours for me to extract some of this data. Some data, something to like this one. These letters represent the majority of bullish and bearish movement, actually. Bullish price movement. Double bottom, W pattern, falling trend, falling wedge breakout, if you know what that is. The mat hold pattern, just did a video about that. I got that signal in this PDF. Then the J-hook, this rounded bottom. Scoop pattern, same thing. Let me show y'all. This is a fry pan bottom. Big rounding bottom. This is a J-hook. Rounding bottom, a little bit sharper. This is a scoop pattern. Scoop pattern. A lot of candles will be going straight. Then you get this little dip. Then you get this little rounded part right here. Look like a handle with a scoop. But what do we notice here? Obvious breakout point. Obvious breakout point. Let me make this one a little bit simpler. Because it's an obvious breakout point. I've been trying to find a fry pan last 2 months. Like a serious fry pan. And you will notice there's just some rounded consolidation in this trade. And then eventually it take off. So what we call this is the classic pattern. Man, I miss my OG. Never even got to meet the man in person. Just learned from him online. Hint, hint. Learned from him online for several years. Changed my life. It's called the classic pattern. It's the fry pan to a J-hook. Because a fry pan has a strong price move. It's like it builds up, it builds up, it builds up. Then it has a huge spike up on this back end of it. Same thing with the J-hook. Same thing with the scoop pattern. You expecting a long, strong up move after these patterns. At worst, on the J-hook, you can expect wave 1 to be the same, wave 3 to be about the same magnitude as wave 1. So this is wave 1, wave 2. So going up was wave 1, going down was wave 2, going back up was wave 3. So even if you miss this move, if this actually breaks out like we hoping some of these do, like we hoping this breakout, if they break out, then the magnitude of that third wave is typically the same as the first wave. So if the first wave went up about $1 and move, you can expect the third wave, once it confirm and crash through our breakout point, you can about assume that it's going to be the same distance and magnitude as wave 1. So the fry pan bottom takes us to the classic J-hook. So it's called the classic pattern because the fry pan bottom creates a strong price move. A prerequisite for a J-hook is a strong price move. So you get the big ass fry pan bottom here, the huge breakout, the natural price consolidation, profit taking, and fear here. And then we're looking for signals. I'm typically trying to be aggressive and look for signals so I can buy in early, just because I like to do that. I'm real familiar with the signals. I know if you get in at the right time and be just a little bit aggressive and set you a stop, because it's so easy to stop out of this shit, because it's going to fail here, typically, because that's a resistance point. The fact that you break out of it and start heading up is what make everybody pile on, because they like, oh shit, the bears is here, it's a strong stock, let's buy some. But what you'll get on a weaker stock, if the situation is not finna take off, what you'll get is that failure. Right there, roll right back over. It'll either hit that resistance and roll over, or hit this resistance, go over a little bit, and then fail, killing your J-hook. So to clean a little bit of this up, let's just go ahead and clean all this up. We was talking about the J-hook pattern today. I gave y'all about what's gonna probably equate to about 25 minutes of info. Take it or leave it. I hope you take it. It is a bullish signal. They do have bearish ones, but we're talking about the bullish one. You're typically going to have a strong price move, some type of retracement. You don't want it to go too far, preferably, right? So you're going to have some strong move, some type of retracement. Then you're going to notice something down here. You're going to notice some type of bullish signals, some type of bullish activity letting you know, uh-oh, this might not actually crater back out to the ground. It may not have had a short run and then fall back down to the center of the earth. It may actually support here. So if it support here, then we already know where it has to go for this to confirm. This is why I know I can trade options. This is how I know I can trade options effectively. Because once I'm down here, and if this is $5 a share at this line, and I'm at 350, and I'm seeing strong bullish signals, and I got the feeling that we going up. I know we going to at least 5, probably 556, maybe. I feel like strongly we going to at least $5 a share. So this is where I got to start buying options to try to put my bid in on where I think this price is going and try to get a little bit more leverage. Because I want every single skill set as far as stocks in my tool belt. I love trading stocks outright. Probably will never stop doing that. But I absolutely think that, well, I know based off what my OG taught me, I just wasn't in the options yet. He taught me that Japanese candlestick signals can absolutely be used to make very profitable option trades, very profitable Forex and futures. So if y'all learn the signals, ladies and gentlemen, learn all the fucking signals, every pattern, and then master them. It ain't gonna take y'all too long. Even if it took a year, what does that matter? Even if it took 6 months, if it took 2.5 years, what does that matter? 2.5 years gonna pass by anyway. So as always, I appreciate y'all. If you got any questions about J-Hooks, jump in the comments. Comment J-Hook if you want me to add you to my 100% free group. I got a full stock trading course. I got a personal finance course based around cleaning up your own credit. I teach y'all step by step how to literally write, investigate your credit reports, dispute them with the credit bureaus so y'all can clean up some of y'all credit, so y'all can figure out how to put some more money in y'all pocket so y'all can trade more with me every single week. And I'm giving all that shit away, man, because I need testimonials. I don't need money. I need testimonials, man. I know how to trade. I'm selling on eBay. We got a couple things going for my family, so I'm not pressed, thank God, to get $1 today or I'm going to fucking be homeless, right? But the truth is, I am trying to make something happen. So I need 15, 20, 25 of y'all to jump in, learn this information, prove it, give me some testimonials, tell me where you were versus where you are, take you from zero to hero, you know? Take you from zero to heroes where you actually in these trades with me or even hopefully trading better than me. That's the goal. So as always, man, I will see you on the next video, and trust me, I will be in them comments.